It's the midweek edition of Business Morning right here on Channels Television. Welcome to 55 minutes of current and relevant business conversations. You only get that here on Channels TV. I'm Amy John Mekwa. We'll get right into it now, telling you what's going on in the global oil space. Prices were mixed in Asian trade on Wednesday after posting 4 sessions worth of losses as markets weighed the effectiveness of OPEC Plus cuts on supplies and worries of a worsening demand outlook in China. Brent crude futures were up 0.09%, prices at $77.21 a barrel. WTI crude futures was down 0.03% at the price at $72.30 a barrel. Both benchmarks closed at their lowest level since July 8th in the previous sessions, with WTI seeing 4 consecutive days of declines. OPEC Plus has agreed at a voluntary output cuts of about 2.2 million barrels per day for the first quarter of 2024. That was done late last week. Those reductions include an extension of Saudi Arabia and Russia voluntary cuts of 1.3 million barrels a day. Worries about spillover effects from the Israel-Hamas conflict on supplies provide some respite to earlier price declines. And however, some analysts remain bearish on price movement. Crude stocks increased by 594,000 barrels, according to sources, on condition of saying that gasoline stockpiles gained by 2.8 million barrels, while distillate inventories rose nearly 1.9 million barrels. Still in the global space now, Chicago wheat futures fell after confirmation of the second large Chinese purchase of U.S. wheat in 2 days drove prices to their highest since August in the previous session. Soybeans inched up as traders monitored weather in top producer Brazil, while corn dipped. Looking at the fundamentals, we see the most active wheat contract on the Chicago Board of Trade was down 0.5% at $6.28 for a bushel after reaching $6.36 for a quarter of a bushel on Tuesday, its highest since August the 25th. Prices have risen 12% in market open since it opened on November the 28th. CBOT soybeans rose 0.1% to $13.06 for a quarter of a bushel. Corn fell 0.2% to $4.89 for 3/4 of a bushel. And the U.S. Department of Agriculture, USDA, has confirmed private sales of 198,000 metric tons of U.S. soft red winter wheat to China. And that followed Monday's USDA announcement that China had purchased 440,000 tons of the grain. That's the largest one-off U.S. wheat export sale to China since 2020. The sales buoyed a wheat market in which speculators and funds hold a huge net short position, making it prone to episodes of short covering that push prices higher. Funds were net buyers of CBOT wheat and corn on Tuesday, net sellers of soybeans. The week's U.S. sales to China brings total since the start of October to 1.15 million metric tons for the period. We come to Nigeria, where we tell you that the governors of Edo, Enugu, Oyo, and Gombe State have been very busy. Yesterday, they presented their spending plan for the year 2024. The 4 state governors made their budget presentation at the different houses of assembly, with education sector taking the highest share in fiscal spending for Enugu and Oyo states.
It's the season of budget presentation for state governments in the country, and several governors have made known their fiscal spending plans for 2024. In Oyo State, Governor Seyi Makinde presented the state's 2024 budget of 434.4 billion naira to the State Assembly for approval. The budget comprises 222.3 billion naira allocated for capital expenditure and 211.8 billion naira for recurrent expenditure, while the highest share of 90.6 billion naira went to education. Next is Enugu State. Governor Peter Mbah presented a budget of 521.5 billion naira for the 2024 fiscal year before the State House Assembly, which is the highest in the state's history, comprising 414.3 billion naira capital expenditure and 107.2 billion naira recurrent expenditure. He said although the economic sector got the highest in the capital expenditure distribution, the education sector got 73.6% of the social sector allocation and 33% of the total budget, presenting the highest in both instances. In Edo State, the governor, Godwin Obaseki, presented a budget proposal of 325.3 billion naira for the year 2024 to the State House of Assembly, with 146 billion naira going into recurrent expenditure. According to Mr. Obaseki, the key sectors in focus include economic growth and employment, road and transport infrastructure, health and education. And finally, in Gombe State, northeast of the country, Governor Muhammadu Yahaya presented a proposed budget of 207 billion naira. The budget is made up of 87.25 billion naira for recurrent expenditure, representing 42%, and 120.5 billion naira for capital expenditure.
Well, budget's in the air here in Nigeria, and hopefully we'll be able to go through the processes and get the budget assented to by 31st of December, which is the plan, so implementation can start in January. At least that is what the Senate President said. But, well, let's talk about some other data now, which came out recently from the NBS, showing that perhaps it is good news, and I say that with a pinch of salt. We'll delve into that to find out if really it's good news, as Nigeria records 1.8 trillion naira surplus as foreign trade jumped by 60.7%. The total trade conducted between Nigeria and other countries increased to 18.8 trillion naira in the third quarter of 2023. That's according to reports by the National Bureau of Statistics. It shows that there's been an increase of 60.78% higher when compared to 6.474 trillion recorded in the second quarter of 2023. However, and this is the pinch of salt, the increase is connected to the devaluation of the country's naira, that's the currency, even though, of course, there hasn't been any official evaluation of that, but we all know what's going on there. And so that made the value lower, value has gone down as goods are denominated in dollars, cost even more. Well, let's get the nitty-gritty of this. Joining us virtually is Mr. Kalu Aja, a certified financial educator, also a financial analyst, joins us virtually. Mr. Aja, thank you so much for your time. Good morning.
Good morning. Hope you can hear me. Nice to be here.
Yeah, great. So on the surface, this looks like good news that Nigeria is finally recording surplus in trade. It's a positive trade balance. But in reality, help us to understand, is it really that good?
Yeah, well, the numbers are good. I mean, we've had a trade surplus now for, I think, 4 quarters. So trade is expanding. We're exporting more, we're importing more, but we're exporting more. So we have a net surplus on the export side, which is good. So overall, the picture looks good. When you look underneath the number, that's when you start to get some concern, some of the composition of that import and that export. And like you said at the beginning, the role that the exchange rate difference plays in boosting the naira figures vis-a-vis dollars. So that's where you now start to get some road bumps. But overall, it's good that we're exporting and exporting more. It shows trade is happening, maybe jobs are being created, and all that is good for the economy.
That we only see this surplus in number because the value of the naira has reduced, which obviously makes same volume of trade, but because, you know, the dollar is now more expensive, that gives us this number and not real surplus.
It's a real surplus, right? Because we also import and we also use the naira that is devalued to also import. So they net themselves out, you know. So we export, like you said, in dollars. We also import in dollars. So net, naira will knock off dollar, and then we still have that, should we say, surplus in terms of exports. Like I said, the real problem is what are we exporting and what are we importing? Our number one export is crude oil. Our number one import is PMS. So it just gives you that picture that, listen, we're exporting the raw thing and bringing in the finished goods into the country. Agricultural exports are more or less non-existent, only about 2 billion or 2% of that whole picture. So very, very little exports. We're exporting raw materials, bringing in finished goods. That's where the picture starts to look pretty bad in terms of the trade figure for Nigeria vis-a-vis other nations.
Yeah, so you talked about what we are exporting, and we've been talking about the issue of diversification, which is obviously what the country needs. Crude, we see the export was above 82%, and our baby agriculture, which we pride ourselves so much with locally, we say employs a huge number of, especially smallholder farmers. We see that agriculture's exports is just about 2%. So that means that this talks around diversifying the economy still hasn't gotten home.
You're correct. I mean, agriculture is the number one contributor to Nigeria's GDP. Also number one contributor to employment in Nigeria. But as you can see from your figure, in terms of trade and earning forex, it's nothing, it's 2%. So the bulk of Nigeria's foreign income is coming from crude oil. And crude oil, as a share of our GDP, is very, very low. It's less than 15%. So the economy is sort of not balanced properly, where the largest employer of labor, the largest contributor to GDP, doesn't generate forex to us. And the largest, the very, very tiny falling share of our GDP, which is crude oil and gas, is generating a larger share of forex to us. So the problem is really that we're not trading. It's just that what we are trading isn't generating forex. And because Nigeria imports a lot, we then are in a big problem because we need that forex to drive not just trade, but even the GDP of the country. Hence, that picture is really unsettling that it's just 2% agricultural export, which is the largest base of our gross domestic product. Not good at all.
Comfort ourselves that agriculture is taking care of domestic demand. Can we use that?
We could, but again, look at agriculture. Look at that space. Fertilizer is imported. Oil plants, water pumps are imported. The seeds are imported. All these land we don't import in Nigeria is the rainfall and the land to make the crops, right? And even on the rainfall, like I said, the water pumps are imported, the fertilizers, the chemicals are all imported. So still, when you go granular into the whole agricultural space, you see that this literally, we're not doing mechanized because we can't afford it, because it's dollar-based. So you come back to this lack of dollar because we're not really trading from the biggest share of our GDP. Imagine if agriculture was doing 50% of our exports and it employed 30% of the population of Nigeria. Then you see that balancing, that everyone is farming with a job, and that farming is bringing in forex, whereas exporting palm oil instead of just crude oil, that employs more people, adds more to the GDP, creates more jobs and more value addition than just crude oil that employs very, very tiny amount of money.
I guess that drags back that issue of diversification, because you're talking of the value chain now. If we had developed a value chain, both for agriculture or even for crude, then we would have seen the country adding more value, and by the time we export this, we're talking of more effects into the country.
Very true. I mean, the Nigerian economy on GDP basis is diversified. So we've got agriculture, we've got trade, we've got telecoms, the 30%, all good. But when you split it into trade or into FX, that's when you see the divergence start up. I mean, crude oil is give or take 80 or 85% of our forex. There's no diversification there. You see the trade figures, 82% or the 2% for agriculture. So no diversification there as well. So this is the problem, that the largest sectors are not generating forex. And in Nigeria, because we import a lot, that forex is very, very important. Even when we trade, what are we trading in? Look at the numbers there. The largest import to Nigeria is finished goods. We're also importing agricultural goods. About nearly 60% of fish and agricultural goods, they make up that about 60% of the total import. So again, it goes back to what are we exporting? Crude oil. What are we bringing in finished goods? So no value addition locally, like you said.
Yeah, well, you know, when you talked about imports there, and yeah, we have the number of imports there. Even before we go to this manufactured goods, which we see, you know, very high right there, almost half of that. One very worrying news that I saw, I think that was last week or so, is food imports increased by 80% between 2019 and 2023. I know we're having this conversation before I came on air with my colleagues, and they were like, what are we importing? Can't we eat our gari made from cassava? And you know, it's really worrying that even our food, we keep talking of the shortage of AFEX, and yet we see increase in the desire of Nigerians to consume imported goods. Food, for this matter.
Well, there's no desire really to consume foreign rice. Just that foreign rice is cheaper. That's the problem. If you want to make rice in Nigeria, you need a mill. Mills need power supply. Mills need credit to operate those mills. But a mill in, say, the US or India or Thailand has a lower cost of production. So you can buy your rice in India, put it on a ship, bring it to Nigeria, pay insurance and freight, and at the port of Apapa, is cheaper than rice you have in Kebbi. That's the problem, that imported food, imported goods are cheaper. The only way you can get Nigeria to buy local stuff is if it's cheaper and if it's plentiful. Without imported food, Nigerians will not be able to eat. That's the reality. That's why we're importing so much. Not because we want to, it's more expensive, right, to get the dollar to import. But the foreign goods seem to be cheaper than the locally produced goods, but the cost of production in Nigeria is very, very high. We don't make enough, first of all, and then the balance, we have to bring the imports in just to meet our demand. Remember, we're on 200 million and we're going at 3%. The rice output in Nigeria simply cannot keep up with the population growth in Nigeria.
And yet we have the potential to all of that. We have the land, we have the weather, we have the human resources. In fact, if you look at the books, we have the policy to drive this.
Yeah, you're correct. I mean, the problem is the value chain. If you go to Benue State, we have more yams in Benue State than any part of the world. Nigeria is the largest producer of yams, largest producer of cassava. We do tomatoes, mangoes, all across the country. The problem is the value chain to convert that yam to, say, yam chips in a bag that you can store for 24/7. You know, you go to Walmart in America, you have mangoes and bananas 24/7, 365. In Nigeria, we have mango season, corn season, they don't see it again. Because once it's out, you know, it's all over the place, it's surplus, the price falls. Once season is over, we're done. And then you struggle to find maize out of maize season. So the value chain is the problem. We don't have any cold storage chain. We don't have all those silos. We don't have cold blast that you can blast meat and keep it. And because of that, prices fluctuate. So during Christmas, prices always spike up because the demand goes up, or supply is really flat, or doesn't stay the same throughout the year. So it's the value chain investment that we're missing to then convert those record surplus, to store it, to process it in a manner that we can draw from those stocks when demand does go up.
Yeah, you know, it can really sound frustrating, even as a journalist. And I want to believe for people like you, television stations, radio, call you to come and discuss this thing, and we keep talking about the same thing. We know what we're supposed to do. We've talked about it. We've heard government officials talk about it. We've seen policies. We've had policy of the ease of doing business. We've had diversification from how many administration. And yet, just implementing it's so difficult. And I'm wondering what's different with Nigeria. I mean, I went to Morocco October, and then you kind of see things working. You see the government say they're focusing on green energy. They have their car, which they will soon start exporting. And these countries do not have more potentials than Nigeria. But for Nigeria, the giant of Africa, just feeding ourselves in the midst of plenty is a challenge. It's sometimes really frustrating.
I hear you. I mean, I can give you many stories. Look at Indonesia came to Nigeria and got the palm oil seeds. I think it was 2021. They did 25 billion exports in palm oil alone. That's more than we did in crude oil. From the palm oil seeds they took from here back there. There are lots of antidotes that you can throw up that address the same issue. One problem, and just to give you a solution, one problem is that the way we have agriculture in Nigeria is too federal-led, right? We either have rural, very subsistence agriculture, and then we have the one or two mechanized. We have no middle layer where you have a 500-acre guy with one tractor or one combine harvester doing 500 acres. We don't have all that in Nigeria. It's very difficult and very expensive to do farming in Nigeria. Again, because the taxation, how we tax, it favors the federal government. The states have no business doing agriculture because if they have a farm, they get nothing from that farm. They don't tax incomes. They only tax the salaries of the workers on that farm. If you go back to the past in Nigeria, the pyramids with the granotes, those were owned by the regional governments, and they taxed and retained those revenues, just like crude oil. So there was an incentive for the states to invest in those pyramids of palm oil and rubber and cocoa, because they got a direct share of the income of those companies. Once we took that away and took it federal, then of course the states dropped any need to do agriculture and focus on crude oil and population, which is basically how you get money in Nigeria. So it's not structural, not just agriculture, the structure of revenue sharing has got to change to incentivize the states to focus more on agriculture that employs more people than, say, crude oil or banking or any other sector in Nigeria.
So does that link up to the conversation of restructuring, which I think the former, just immediate past administration, they had town halls and went to different states talking about restructuring? Is that the same restructuring of the structure you're talking about?
Yeah, it's a fiscal federalism to say if I make money in Kogi State, what happens to it? That's what we're talking about. Kogi has cassava. Kogi has a lot of soybeans there. Now, soybeans and cassava are needed by China. China can't get enough. And there's this issue with tension I have with the US. So if they come to Nigeria and they say, we want sorghum, we want soybeans, we want cassava, supply us, we won't be able to meet up. Now, federal can't do it alone. Kogi State has to go to the farmers and say, farm. But why should Kogi waste his time? When if he does all that, the income goes to the federal government and is shared to all the states. But if Kogi State was retaining, even if it's 13% of whatever incomes from agriculture from Kogi State, then you'd see an incentive for the government of Kogi to grow agriculture, because it's going to get the foreign currency income back to Kogi as derivation. Then you see a competition for every state to then export ginger or vegetables, because they're going to get the derivation dollars back to them. Right now, if they do it, it goes to the federal, it's going to be shared like VAT. So the fiscal federalism is tied to agriculture. You've got to incentivize locals and state governments to invest in agriculture. And the more investment there is, then the prices start to come down and yields start to go up. So it's all tied together. You simply can't ask people to go farm without incentives.
Well, I hope President Bola Tinubu and his team are listening to this, and perhaps they could get one or two things from that. I'm talking about the president. We see that one thing his administration has been good with has been increasing crude production, even though that also points back to sustaining the current structure of more than 80% exports of crude, making up our trade, our exports. But at least we can say that will increase the revenue, and it seems is one thing we can applaud him for in his about 6 months in office.
Yeah, well, he has increased it, but it's almost like we had 100, then we took it to 0, then he increased it to 5. So yes, it's been increased to 5, but we're coming from 100. 2018, Nigeria was doing 2.2 million barrels per day. Right now, we're about 1.5. He took it from about 1.3 to 1.5. A big gap, big leap, right? So we get more forex. But Nigeria should be talking about 2 million barrels minimum, because at anything below that, you're not getting enough revenues in Nigeria. You've seen the numbers. The number one generator of forex in Nigeria is crude oil. Agriculture doesn't come close. So you don't spend time now chasing cocoa and rubber. You go straight to crude oil, get the forex in, and then use that income to then grow the value chain of agri. So even the budget is saying 1.7, the medium-term frame of 1.7, that's our target. We should be talking 2 million, because anything below that, we really can't feed the population. That's 200 million people. And oil prices are not going to stay high forever. So kudos to them, but big picture, we are still below what we did in 2018, 2019 in terms of crude oil output. We can do more, and we should do more.
Yeah, we should do more, and that has not helped us when it comes to our FX and the value of Naira, which is where we started this conversation. And we've seen the Naira drop, from about 400. Now we know what it costs in the different markets, in spite of what the benchmark is in the 2024 budget. And I don't know, do you see where there's a booster coming in? We've heard of refineries coming up, God willing, by December, at least one of them.
Yeah.
Do you see a booster, like as the year comes to an end, first quarter of next year, do you see the Naira regaining some of its value?
The Naira is a derivative of Brent crude. So if Brent crude prices stay up and we get our output up, the Naira value would rise. It's that simple. We have to export the oil. So right now the oil prices are up, but our exports are down of crude oil. So if we can if the price stay up and we export more, the Naira will gain value automatically. No magic there. Then we'll talk about things like foreign portfolio investments and remittances that can quickly come to Nigeria from Nigerians and also the guys that are going to buy bonds. That's the midterm to say, okay, can we attract that cash into Nigeria? That can happen if the Nigerian government starts to show trust and competence in managing resources. Right now, if you are a Nigerian living in Canada and you want to invest $1,000 into Nigerian bonds, what you're hearing is Nigerians are going to COP, Nigerians are buying SUVs, Nigerians are buying this. So you don't really trust the government's ability to invest your money, so you basically put that money in Canada or the US. So if there's trust in how the government can manage funds, they attract the medium-term FDIs, FPIs, and remittances. But the immediate thing that can drive the Naira to gain value is the exports of crude oil, nothing else. The next 3 months, if you export more, the Naira gains value. If you don't export more, Naira isn't going to go anywhere. I want to talk about exports of agric. Leave that aside, that's 2%. Go after the big one, crude oil. Export more crude, the Naira gains value. It's really that simple.
Yeah, but it's not just crude, is it? If we export also finished goods, it can also contribute.
Just crude. Your numbers you shared. So we are export is crude oil by 82 or so.
Yes.
So by numbers, if you do 10% of 82, you're doing more than 100% of 2. So just focus. That's your numbers right there. Focus on crude oil. Just get that up by 10% from now to say January or February. You see the dollars coming. So it's a math equation now. You've got to go for what gives you the bigger bang for your buck. You can say you want to do manufactured goods 1.9%. If you grow that 100%, that's less than 5%. If you do 100% of manufactured goods or 100% of solid minerals. But just doing 10% of crude oil gives you that income boost in dollars. You can easily turn that tap. And it's not that we're not looking for crude oil. We already have the crude oil, but the pipes are being attacked by the thieves. So once you protect the pipes, you get the output up. It's not like, we're not drilling new oil wells. Get that point again. It's already there. It's just to protect the pipes and export more. Then we can increase our foreign reserves from crude oil. Remember, OPEC has already reduced the output. So that puts more pressure on us to do more condensate or to do more gas. So the clock is ticking. Very soon, crude oil is going to keep on coming down. China is already getting weak. So we have a very, very limited window to export as much as we can, to get as much dollars as we can into the economy in the short term. Medium term is going to be FPIs, remittances. Long term is FDIs, foreign direct investments. It has to go like that. Crude oil, FPI remittances, and then of course FDI. That's what boosts the Naira. There's no other way to do it.
All right, well, thank you for the hard truth. Mr. Kaluaja, certified financial educator, for sharing your thoughts with us. And we do hope that conversations such as this get to the right windows or corners and action is taken. Thank you for your time.
Thank you so much. Appreciate your time. All
right, let's take a break now. When we come back, AFEX is on. Welcome to AFEX Commodities Market Update, and we give you a review for the week ended December the 4th. We can tell you that in the last trading week, there were mixed performances across key indicators. Turnover, for instance, dropped by 1.31%, closing the week at $2.4 billion, and that's a drop from 3.15 billion naira, not dollars, I beg your pardon, FX trades in Nigeria. And volume of trades also witnessed a drop as well by 1.30%. Number of deals, on the other hand, was on the flip side, 1.52%, closing the week at 140 from 92 in the previous trading week. The AFEX Commodities Index went down by 1%, while the AFEX Export Index went up 1.85%. Let's look at the volume of true contracts now. There was an increase in volume across maize and soybeans for the contract for the period in consideration, that is ending December the 4th. Now let's see the price of commodities for that same period. See which of the commodities went up or went down. Starting right there with cashew nut, we can see that was unchanged at 632 naira 73 kobo for a kilogram. That's how it's traded for cashew nuts. Let's have the next commodity right there. We have cocoa. Cocoa was in the green for the period in consideration. It's gained more than 12% to close at 4,400 naira, and that's for a kilogram as of December the 4th. Ginger on change at 990 naira for a kilogram, remaining the same price it was in the previous week. All right, now let's go to the other segment. If you want more information on AFEX, you can always go to their website, their social media handles to get more information. There you have it, africaexchange.com, the social media handles, AFEX Nigeria, and at COMEX by AFEX. While AFEX is doing its business of trading, being a trading platform for agricultural commodities, they're very well concerned about food security. And so they're talking about strengthening Africa's export market. And we know that the public sector, which is the government, they do have their roles, which is mostly to make the environment easy for the private sector, but the private sector should drive exports in whatever form, whether it's in agriculture or otherwise. We have joining us to discuss how AFEX is driving this PPP relationship, the role of the public-private partnership when it comes to exporting food, agricultural commodities. Joining us is Jane Ogoke. She is the National Sales Manager, Exports Markets with AFEX. She joins us from here in Lagos. Hi, Jane. Good morning.
Hello, Ini. Thank you. And indeed, I am happy to be here.
Well, I can see it on your face. So what are some of the current challenges that faces Nigeria agriculture export? We just talked about exports in our previous conversation. I don't know if you watched, where agriculture is exporting just 2%. And that's kind of heartbreaking, even though in the short term, our guest then had said, let's stay with this, we'll stay with crude, but when we have so much potentials when it comes to agriculture, we have the land, we have the good weather, we have, even the seed, and they've been improved on, and yes, we see agriculture exporting just 2%. Kind of worrying. What are the challenges, that militates this growth?
To be honest, there are unlimited challenges that we face both in Nigeria and in the African market as a whole. But a few of these challenges we cannot overlook are the bureaucracy in exporting. That is one as well. The bureaucracy in the export process in general. Knowledge gap is also one of them. So we have a lot of people that want to export, but do they have the knowledge? Do they understand what should be done to successfully export? But more importantly, in the agricultural sector, we do have quality of produce, quality produce meeting the standard that is required globally. We have price, and interestingly, we do have climate change. In this season, we would expect the weather to be cold, right? We are in December, but a couple of days back, it just rained. And this rainfall has a significant impact in the yield and the produce of our agricultural products in the farms. And interestingly, with cocoa, which we are experiencing today, this rainfall has limited the high yield of cocoa that we would have in the season, which is between October and December, which is where we have our main crop. We can see that the yield and being able to meet the demand is extremely low, and this is because of the climate change that we are experiencing.
Then we have the AFCFTA, the free trade area agreement within African countries. How much of that can we infuse into this PPP agreement and arrangement to boost it and boost trade within the continent?
So it's interesting to also know that the whole of Africa is a work in progress, and we wouldn't get there overnight. And the impact that we get from this partnership, both public and private, is of relevance importance. At the IATF in Cairo a few weeks back, AFEX inclusive with 16 other exchanges signed an MOU to create an association of commodity exchange. We can also see the impact of AfriExim banks and their commitment to 2 billion and the agreements that they signed towards food security and agricultural exports. So we know that all of these partnerships that we are having currently across Africa is helping us tie back to the role or tie back to the goal of the AFCFTA. And since we are a work in progress, the best we can all do is to continuously engage in this partnership to take us to global competitiveness or Africans' global competitiveness in the market.
And then AFEX just released their crop production report. What is one of the high points of that report?
So we should expect, interestingly, I will go back to climate change. We should expect a high yield in specific export commodities like sesame, and also an increase in sales. and inversely, we should also expect a decline in cocoa production. We can all tell in today's market that the production of cocoa has declined currently, and this is still due to climate change. The cost, the cost of cocoa in the past used to be about $2,500 per metric ton, but today cocoa's price is $4,200 per metric ton, which is averagely 150 million naira per truckload, compared to 52 or 51 million naira in the previous season. So we should expect a decline in cocoa and inversely an increase in production of sesame.
Well, I guess that's why the world is very interested in COP28, what's going on there when you talk about climate change and all of that. But thank you so much, Jane, for your time this morning. National Sales Manager, Export Market with AFEX.
And thank you for having me here.
Let's take a break. We'll be back with more from the markets. And so from the commodities market to the money market with Iwel Ibong.
Good morning.
Good morning, Will.
I do have good news for you from the equities market. You know, it was up yesterday, rebounding.
I told you yesterday was just...
let's call it a blip. You know, as a native calls, it's just a blip. So that's a blip for Monday, but we did see them setting a good pace from Tuesday. Hopefully it continues today.
Hopefully, yeah.
We're going to look at the fixed income market and see how they performed yesterday, but more of a mixed sentiments in that space, bullish, bearish. Let's see where that takes the market. So we see that the market traded for the bonds market, which was mixed sentiments yesterday, but more bullish because average yield dropped by 1 basis point to 15.6%. So across the curve, we saw the average yield closing flat at the short and the mid segments, and this we saw that dip also at the long end, following the demand for the 2050 paper. Trading in the NTB market, let's look at that. It was bearish yesterday, meaning that yields went up yesterday. Average yield went up by 45 basis points, about 11%. Now, across that curve, we saw that yield also closing flat at the short and mid segment, but advanced as rose at the long end, following sell-offs in the 352-day to maturity paper. Elsewhere in the OMO segment, we saw yields also dropping by 1 basis point. We're bringing in Caleb Alimi, is the Chief Dealer at Providence Bank, to give us more insights as to what to expect from the market. Good morning, Caleb. It's good to have you on the program.
Good morning, Will. Thank you for having me.
Caleb, well, today is the Treasury Bills primary market auction, where 104 billion naira worth of instruments will be on offer. What are your expectations?
We expect the auction to close somewhere around the 16% handle. That's due to the fact that, what we've seen consistently over the last two auctions is that the DMO oversells the auction. Last auction was oversold by a total of 340 billion from what was on offer. We expect that would also happen at this auction as they're trying to wrap up and meet their budget requirements. So we see the, the 1 year paper, the last auction closed at 16.75. We think it will still close around that handle, somewhere between, the highs of 15 and, midsection of 16, due to the fact that the interbank market is also sort of liquid. That plays a part in the minds of investors or in the banks that will be buying these auctions as well. So we think it will just moderate around that 16% handle.
So what about yields? Do you see, for the secondary market, do you see yields that trickling into the secondary market?
Yes, trickling into the secondary market, we think yields will decline in secondary market. The last auction that closed at 16.7, trading in the secondary market around highs of 14, like 14.7, 14.5, later on. We think that will happen again because at the next auction, there's even a much smaller quantity on offer, just about 15 billion at the next auction. So based on that, we think investors will pile into this. If they miss out at the primary auction, they'll come and, take a bite of that cherry at the secondary market. So we think we'll see yields trend downwards after the auction.
Thank you so much, Caleb Alimi, Chief Dealer, Providence Bank, for sharing that. We'll look forward to what the market holds for us at the close of business. So thank you. So we see that stock market, as I mentioned, in a reversing Monday's loss and closing the green yesterday. But we hope that the market is going to sustain that bullish momentum because I definitely need my bull to keep riding.
All right, Will. Thank you. See you at 1:30. Well, let's run over to London, where Juliana is back from her travels. Climate conversations and all of that is what Juliana has been doing. Juliana, bring back some climate funding and financing is what we need here. Good to see you. Welcome back, Juliana.
It's always nice to see you, Annie. I don't share enough of the screen time with you anymore, so it's always great to have a robust discussion with my boss.
Okay, so Prime Minister is really serious. Rishi Sunak is really serious about curbing migration. We've seen some stiffer rules being introduced, a new treaty with Rwanda in spite of the court case, and all of that. I mean, you guys give us a break right here.
I would say lots of people would agree with that sentiment, Inni, and it does appear after yesterday's announcement that the Prime Minister is really taking a hardline approach on immigration or illegal immigration, and that's because we're coming towards the end of the year where there are only 25 days left in 2023. And if you remember, Inni, at the beginning of the year, one of the Prime Minister's 5 promises was to stop the boats, and he hasn't been able to do that. One of the ways he wanted to do that was with this Rwanda deportation scheme, which last month the Supreme Court ruled was unlawful. Now, there were several reasons why the Supreme Court deemed the scheme unlawful, but one of the sticking points was that Rwanda is an unsafe country. So yesterday what we saw is that the Home Secretary, James Cleverly, he flew 4,000 miles to the Central African country to sign a new deal with Rwanda. Now, the British government have already spent £140 million since the scheme was made legal in the Conservative Party from April 2022, but since that time not one single asylum seeker has been sent there. So we've lost a significant amount of money, the UK taxpayer, and we do believe that more money is going to be spent. Now, this is going to be a big issue because, of course, what Rishi Sunak, the Prime Minister, is trying to do is circumvent our relationship with the European Court of Human Rights, as well as the Human Rights Act, which were several reasons why the Supreme Court did deem it unlawful. So now what the Prime Minister wants to do this week is push through some emergency legislation because they do believe that with the signing yesterday, they ticked off a lot of boxes to now deem Rwanda a safe country. So there are several lines within this inquiry. Lots of Conservative ministers, in fact, from what I read this morning, about 10 ministers are looking to quit if Rishi Sunak does go ahead with this. But look, you know, the Prime Minister is a man on the ropes. We know that Sir Keir Starmer, the leader of the Labour opposition, is the Prime Minister in waiting. If you have a look at the polls, it's not looking great for him. And I think for some Conservative voters, particularly those in the Red Wall, they want migration numbers to go down. And the Prime Minister believes that this is one of the ways he'll be able to win the next general election.
Well, we'll see how it goes, but it sounds like there's a whole lot more. And unfortunately, the migrants do not have a say in this, Juliana. But thank you. We just, because we have a little bit of time for Ladi, we'll talk about the landlords with Will in the afternoon here. They're not having a good time right there in the UK, but I guess that will be for Business Incorporated.
Thanks, Annie.
All right, now in a couple of minutes, the program needs to come to an end, but we cannot end the program without talking about this positive movement by Bitcoin, especially.
Yeah,
I know Ladi is happy. Ladi should be having green jacket, green everywhere.
Screen, but right now, this is all I can manage. But look at that, $43,550 for Bitcoin. Did get about 44,000, breaking key resistance levels this time. Ethereum also holding up above $2,267. We're seeing little pockets of red on the Coin360 map at this time, showing some profit taking with big candles we've seen. Let's bring in Gilbert Jopatana, financial market analyst. Hello, Gilbert. Good morning. Hello, Gilbert. All right, we'll try and get...
Yes, good morning.
Oh, fantastic.
Good morning, Mrs. Ladi.
Right, I can hear you now. So, yeah, Gilbert, it's still a really bullish market at this time. Going into 2024, what narratives are you seeing dominating the crypto space?
Okay, the cryptocurrency market is always heavily driven by narrative. Most times they change and always replaced by the new ones. But so far, there are three key narratives driving the cryptocurrency market right now. I think one is the ETF approval, which has trillions of US dollars on the sidelines waiting to enter into the market. The second is regulatory clarity. For the approval of the ETF and also cleansing of the ecosystem and also XRP victory, we have been seeing more regulatory clarity coming into the cryptocurrency space. So with this, I think many persons will start pushing into crypto assets that meet some regulatory lines before they get into the market. And another is actually the artificial intelligence, AI trend. AI trend is a heavy driver that I think will drive next year's rally, which we'll see in the marketplace. And there is already demand and sentiments already surrounding AI-related projects. And I think this will be a driving force for next year. Meanwhile, we also have, what's the name? The next halving. The next halving is also here on the sidelines, which I believe is going to be a major driver and will drive sentiment and narrative as well in the market. But most times sentiment are always replaced with new ones. And I think out of this narrative I've mentioned, some may be replaced, and we may have one or two that will be a major driver for next year's price rally, which we will see in the marketplace.
All right, I know the week is coming to an end soon, but are you still seeing this bullish trend in a few words?
Oh, so far, Bitcoin has broken so many major resistance, regardless of, right now, I think the bears are in disbelief. And while I believe that we are already approaching some very significant zone in the marketplace, 45 is a major significant zone, so also is 47. These are significant zones, but right now, I think more attention should start being paid into altcoin for investors who want to take advantage of this rally, because we are going to see, if sell-off from market cap is going to happen, it's going to happen from Bitcoin into altcoin. Bitcoin has already given us an impressive rally, and probably we are not going to see a major dip below this zone, except we have any major news events from regulations or any major triggering event. I think we are going to sustain being at this market structure for a while.
Right.
Are we going to break out? I already think we are already approaching some very significant zone of resistance for Bitcoin.
Right. We'll definitely be watching out for those zones. Thank you so much, Gilbert Japata. Thank you. So, Ini, there you have it. These are the issues with bull markets, trying to figure out where to take profit.
Yeah, but I mean, I think Gilbert did say something. While Bitcoin is doing what it's doing now, it might be a good time for the alts.
Yeah,
you know,
there's so much to look out for, but you don't want the market to take back all of that profit. We'll keep watching.
If investors don't take it, the market can do nothing.
The market will take it.
All right. Thank you so much, Ladi. All right. So that's it. 55 minutes or so of current and relevant business conversations. That's what we're just coming to an end. And I do hope it was valuable to you. We'll be back. I'll be back tomorrow with another episode of Business Morning, but you can always watch today's episode, yesterday's episode. You can watch it on youtube.com/channels web. Willie Bond will be back at 1:30. And remember, you have that conversation about the landlords in the UK. You don't want to miss it. So 1:30 with Will Ebon.
They swore an oath to serve our fatherland and defend the people.